Welcome to the KIS Investing Trade of the Week. We're going to talk about rotation this week. And what is rotation? Rotation means when money flows from one sector to the market to another sector that has been not so popular. So lately we know technology has been very strong. The FANG stocks have been on a tear. The Nasdaq is up almost 40% for the year. And we have other sectors that have been lagging, like financials and energy. And on Monday, we saw a huge rotation when the vaccine announcement from Pfizer, and people were selling their winners, their FANG stocks, and buying into the financials and the energy sectors. That's what is called a rotation. And that is our focus for our trade of the week. I will show you a trade, how to take advantage of this rotation out of technology and into financials and into energy. Without further ado, let's go and get to the trade of the week. Let's start by taking a look at the three sectors that are our focus of our trade of the week. Let's start with the technology sector, XLK, which is part of the S&P 500. And here we can see clearly that for the first time in a long time, the Nasdaq is retrieving a little bit, not too much, but it's down 3% from its high. I know this doesn't seem significant, but we have not seen one single month of the Nasdaq having a negative period. And this is significant as on Monday, it had a huge reversal. You can see it on the chart. It gapped up huge and then it reversed down very hard. And now let's take a look at where all the money that left the FANG stocks and the technology sector rotated to. First, let's take a look at financials. As you know, financials get hurt when interest rates are low, which they are very low right now because they cannot make as much money as they do when interest rates are high. And here we can see the XLF. It went from a $22.91 price to a $27.48. Just take a look at what happened on the gap up on Monday. It gapped up all the way to $27. Now the XLF has recovered 20% from its low, and money is rotating out of the momentum into XLF. We can see this clearly. Now let's take a look at XLE. Same thing. Take a look at the huge gap up on Monday. It gapped up all the way from around $28, $29 to $33 and $34 per share. Made an increase of almost 28%. So we can see people rotated out of technology, rotated into financials, and rotated into energy. And I know what you might be thinking. Hey, Tony, we already missed this trade. But guess what? These type of trades actually tend to take longer than just a few days. What I would recommend is to look for a red day, a negative day, a day when technology is up and financials and energy are down in order to start this trade. What I'm going to do now is try to show you what trade I would place, and then you can decide what to do. Remember, these are not trade recommendations or suggestions. These are just ways of me showing you how to take advantage of a market rotation and how to profit from it as if you were a macro hedge fund investor. Opening up our tastyworks platform, we can see that I have already typed in XLK as it's going to be the first part of our three-part series of our trade. Once again, you can do one part of the trade, you can do the three of them, or you can wait until you have a back to momentum trade where XLK is up and financials and energy are down in order to have a better priced entry. So let's take a look at XLK. I'm going to January the 15th because December, it's only 34 days away and it's not enough time for give the trade a chance to work. So when we open the January trading option chain, we can see that I have the trade here. I am wanting to sell the January 125 call and purchasing the January 130 call to define our risk. All this for a credit of $1.47. This is approximately 1/3 the width of the strikes because the width of the strikes are $5, and we're collecting 150, which is very close to 1/3 the width of the strikes. And this trade has a probability of profit of 65%, and it has a theta of 0.7, which means that every day we're almost going to make $1 of theta. If we look at this trade graphically, we can see here where we would profit. We would profit if XLK is below 125 on January, the third Friday of January, and our break even will be 126.47. So that is the trade where we're hoping that XLK will go down a bit. Right now, XLK is trading at $121, so it gives us a little bit extra cushion in case XLK keeps going up. Now let's take a look at XLF. XLF, we can see here that I'm also going to choose the January expiration. And here I want to do a short put spread. That means we're going to be selling the January 27 put and purchasing the January 25 put for a credit of 67 cents. This is once again a third of the width of the strikes, and that would make it a mathematically correct trade. And our probability of profit for this trade is 56%. So, and right now I know XLF is trading at $27, so it doesn't give us much room to be wrong. Take a look at the trade graphically. Here you can see that we have around 67 cents, so our break even is going to be around 26.33, and anything if XLF isn't above $27 at expiration, we will profit on this trade. Now let's take a look at the final leg of our trade, the XLE. The XLE, I'm wanting to sell the 32 put and purchasing the 30 put to define our risk. Also, I'm looking to collect 67 cents for this trade. This trade has a 60% probability of profit and a maximum profit, of course, of 67 cents, which is the credit received. It is also a third of the width of the strikes. And let's take a look at the trade graphically. Here we can see that, of course, we will benefit if XLE is above $32 at expiration, and we have 67 cents of cushion, making our break even $31.33 at expiration. So there you have it. If you like this trade, you can do 1, 2, or the 3 legs of the trade, or you can wait until you have better pricing, meaning higher XLK and lower XLF and XLE, or you might want to put some a small started position so you can follow the trade and then complete the trade as the trade goes against you in order to have better pricing. Thank you very much for watching the KIS Investing Trade of the Week, the rotation out of technology into the laggards, into financials, into energy. And please, if you like this video, consider sharing it to somebody who might enjoy it. Also, if you like the video, click like, click subscribe, and also click the little bell notification. If you want to learn how to become a millionaire and learn about personal finance, I have a free course, The 9 Proven Steps of Becoming a Millionaire, link below. Also, if you want to open your tastyworks account and use the same trading platform that I use to place my trades, there is an affiliate link below. Just click on it and open your tastyworks account. Next week is going to be fun. Good luck trading, everybody, and remember, you gotta risk it to get the biscuit, baby.